Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Hormuz Patakia. Hey Hormuz, good morning. We started on a good note. The open today was around that 25,070 mark and we've only built on to gains from there. So the high today was 25,181. We've come off from those levels, but still it's an 84-point uptick that we are looking at. The mid-caps doing well, absolutely in line with the benchmarks as we speak. We have the Nifty Auto, which is doing well yet again. That particular sector continues to be in focus. Small cap index is higher, 0.7% higher on that one. We have the CPSE index as well, which is doing well. So 0.7% higher on the CPSE names. Private banking index, we have the consumption names. So all in all, everything except for the FMCG pack in terms of Nifty FMCG index is doing really well in trade today. If we talk about movers in the broader markets, a lot of these chemical names are doing really well. I'm sure Hormuz will have some of them on their list as well. But look at something like a Tattva Chintan, which is up 5.5%, has been an underperformer because of weak earnings in last, I would say, 4 or 5 quarters. But today, this stock is making a comeback, Tattva Chintan Pharma. We do have Indoco Remedies also, which is doing really well. There's something like a Mahanagar Gas, which is up 4.5% today. So lots of stocks to talk about. Some of them seeing a bounce back after weak reaction to their earnings in the quarter gone by, but we will talk about them in greater detail. For now, Hormuz is here with all the stocks and the top movers in the market as of now. Hormuz, tell us more.
There's so much happening in the broader markets that it is difficult to pick and choose among them. But we start off with some top gainers from the small cap index today. Redington is one of them, and 13% higher now on the stock today. This is the biggest single day gain that you are seeing since March of 2021. And to take a look at the volumes here, we've in the first couple of hours of the trading session, we have already had more than 2 crore shares that have been traded compared to a 20-day average of just 5 lakh shares. It shows the kind of volume moves that we have seen on Redington already in the first couple of hours of the trading session. Courtesy of this move, the stock has broken above its 50 and its 200-day moving average. And another important level to watch is 272, which is the 100-day moving average. And currently, it's slightly above that 100-day moving average. It has had a good year so far. Redington is up 35% on a year-to-date basis. The other name that springs up among the gainers is Explio Solutions, and that is another name that once was up around 10-11%, still holding on to gains of around 9%. Is the biggest single-day gain since June, so it's the biggest advance in 3 months. It snapped a 2-day losing streak in today's session, was down 1.5% each over the last 2 sessions. And today's volumes, well, 1.5 lakh shares have changed hands. The 20-day average is just 5,000 shares, so it's not a very frequently traded stock. And today's volumes already 1.5 lakh is equal to the last 18 sessions combined for Explio Solutions. So that's another mover today. Vaibhav Global, that name springs up on the list. It has gained in 5 out of the last 7 trading sessions. In these 7 trading sessions, of which it has gained in 5 of them, the stock is up 18%. It has recovered from those levels of around 220, 230 to around 260 now. And today's volumes, 12 lakh shares have changed hands already compared to a 20-day average of around 1 lakh shares this time of the day. And courtesy of this move that you have seen in the last 7 trading sessions, the stock has trimmed its year-to-date losses to 12%, still an underperformer on a year-to-date basis. And the last name on the list is Steelcast, and that is now seeing its biggest single-day gain in 5 months, 14% higher now on the stock. And we've already had 15 lakh shares that have been traded on the stock compared to a 20-day average of just around 25,000 shares. And today's volumes so far is equivalent to the last 29 sessions combined. So we go into early August is where you go into the traded volumes today, and the stock has done well so far this year, up 37% so far, and is also closing in on its 52-week high, which is around 250 rupees, Sonal.
All right, some interesting names there. Thank you so much, Hormuz, for joining us as always and telling us some of these movers in the broader markets. It's a good time to get a fundamental conversation going on the markets. Devang Mehta from Spark Capital Private Wealth joins us now to discuss market fundamentals, individual sectors, something that he's betting on as well. Devang, good morning. Thank you so much for joining in. We have been talking about a lot of macro updates that have come by, be it the GST cuts. We have been talking about the festive demand pickup as well. In that scenario, if you can tell us and drill it down to individual stocks or sectors which tend to benefit the most, also considering the valuation picture.
Thanks, Sonal, for having me on the show. It's always a pleasure to be on CNBC TV18. Good morning. Very importantly, I think what has changed the complexion of the market in the last 8-10 days, and as you rightly talked about, probably the festive season demand is what people are now factoring in. With almost Navratri starting on 22nd September, and I think the effects of GST, the benefits of GST also start trickling from 22nd September onwards. Most importantly, what has sort of objectively happened for the market over the last 1 year is we faced a lot of headwinds in the last calendar year. But this calendar year, if you look at, except for Trump tariff tantrums, I think a lot of positives have emerged out, right from the GST benefits to India upgrade to a good monsoon to RBI being accommodative, RBI putting in liquidity, RBI doing rate cuts. I think most of these things have turned positive. I think we are somewhere near the I can say it's a beginning of the end of the downgrade cycle, which is very important as you put valuations also as a question. So my sense, yes, we might optically look a little expensive, but on a lower base effect, at least from the third quarter of this financial year, we might see earnings coming in as sort of better optimism, and probably also upgrades on the way. I think it's too soon to talk about upgrades, but I think a lot of pessimism has also been factored in. Now, with festive season demand coming in, probably this quarter also would not be that sort of momentum led. But October, November, December is a quarter where Dussehra as well as Diwali falls over there is clearly a festive demand quarter. My sense, a lot of these consumption-related names, probably more of discretionary and luxury consumption names, autos, hotels, all this would do well. With that, also a lot of capex-related themes, as well as a lot of your financials, credit growth-related themes should start doing well. So my sense that probably from here on, the risk reward looks very attractive as global markets are turning expensive. I was also doing the comparison that Indian markets are just MSCI India is up by just 1%. And MSCI Asia ex Japan is up by 21% for this calendar year. So I think there's a lot of money that could flow towards India. Yes, probably couldn't time it to perfection, but next 3-6 months, I think we can see a bit of FII flows also starting.
Devang, good morning. Thank you for joining in. We're counting down to yet another earnings season. You're just a couple of weeks away from that now. Do you expect the second quarter to be slightly better, if not more, as compared to the first one, especially considering the fact that there has been a lot of flood-related disruptions and so on and so forth during the quarter as well?
Yes, absolutely. Two things I think are monitorable over here. One is the numbers. Of course, the market follows numbers very closely. Market participants follow the numbers very closely. Two things happened. One, as you rightly talked about, flood and sometimes also the not so good effect of monsoon. Secondly, yes, we also know that there is going to be a deferred demand. Because the last 20-25 days since when the GST was announced, I think it took some time to probably culminate. My sense, yes, there can be a bit of deferred demand which could trickle into October, November, December as a quarter. But market knows this, right? Market is a discounting mechanism. So markets will start factoring in this not so great numbers a little early than what we think about. Most importantly, I think the commentaries of the management, because they would also see this last 8-10 days of September, the consumption companies, particularly companies related to banking demand, NBFCs, the consumer lending companies. I think even capex related companies would probably see that their order books are now full and how the execution happens. So my sense, the commentary of the management, the body language will be more important in this quarter. The third quarter could actually turn the needle in terms of the positive results as such.
Devang, you spoke about capex and consumption being two themes which could work going forward. Our colleague Nimesh had done a piece on this. He spoke about how now money is moving from the capex themes to consumption. We took it forward on MF Corner as well. And we spoke about how, yes, this might be the theme that would happen going forward. So what is making you so positive on capex? Because that theme did work some time back. Will it still work? Or do you think that money will gradually start moving from capex to consumption overall?
I think typically what I always say, and I think at the expense of being repetitive, I would say that three themes probably would do very well. Apart from that, there are a couple of more themes. But clearly, one, India has always seen in the last 25 years, if we just go back in history, Indian investors have always made money in one, consumption. Second, typically IT, post 93, 94, when the IT companies started to get listed. Banking, PSU banks from 2000 to 2010, and private banks and NBFCs from 2010 to 2020 sort of, and also pharma companies. These four themes typically made money for clients. I think 2003 to 8 was a cycle where a lot of capex-related companies came to the fore and did 5x, 8x, 10x type of returns. But I think I'm seeing a time that India probably has always been back office to the world. Can we become a very small factory to the world? I'm nowhere saying that we are talking about China plus one, but can we probably do a bit of capex related work, engineering, manufacturing, a bit of semiconductor allied, power, renewables? I think this is a sector which has just opened up. Defense, railways. Yes, they did very well for the last 2-3 years. Can it slow down a bit for the next 3-6 months when consumption comes back to the fore? It can. But my sense that you have to ideally have a portfolio where consumption will lead to capex and capex will lead to credit growth. So I think these three themes, typically domestic oriented themes more so, where capex should also be one of a prominent theme. Consumption has come back to the fore, rural as well as urban. And third has to be credit growth related, sort of banks, sort of NBFCs, a bit of financial intermediaries. This can be the construct of the portfolio.
You know, Devang, as you mentioned about capex and consumption, the other bit that has been a big talking point so far has also been the pharma space, right? You know, a lot of consensus among the analysts is the fact that based on the uncertainty, you should shift your focus towards the domestic-oriented pharma companies. But then this overhang of the US FDA continues to remain as well. Where does your preference lie? Does this, now with tariffs for now at least being exempted, do you prefer the US exposed pharma companies, the larger pharma names, the Sun Pharmas or the likes, or would you like to go with the smaller pharma names, or maybe even choose hospitals or diagnostic players?
Yeah, I think beautifully put. I think very clearly we are in the camp that says that larger pharma companies, come what may, they have sort of created wealth for investors. They might continue to do so, but with the headwinds around the sector, I think there are a lot of niche opportunities, as you rightly said. India right now is a beneficiary of a lot of new sectors listing. The last 5, 6, 7, 10 years have seen hospitals, diagnostic laboratories. Yes, we are positive on certain hospitals, not all. We are positive on a couple of diagnostic labs as well. We also like pharma companies which sort of right now don't have US exposure. There are a couple of pharma innovators. There are 1 or 2 MNC pharma companies also which are part of the portfolio. But traditional companies into generics and sort of always having the IR from US FDA are not in the universe as such immediately. Yes, we might look at them at certain valuations, but as I say, more so niche pharma companies and sectors which are allied to pharma, like hospitals or diagnostics, are something that we are looking at.
All right. Okay. Thank you so much, Devang, for all your thoughts and the outlook on the markets and individual sectors as well. With that, we'll do one thing. We'll slip into a short break. Up next, we'll focus on the crypto market with Nick Bhatia from the Bitcoin layer, with Manisha Gupta on the other side.
Powered by Coin DCX.
Welcome back, and joining us now is Nick Bhatia from the Bitcoin layer. Nick, hi, thank you so much for joining us here at CNBC India. First of all, your sense ahead of this asset class, ahead of the US Fed meeting announcement, really, because almost all asset classes have factored in a 25 basis point rate cut. How are you looking at crypto or digital assets in the same light?
Bitcoin has been in a bull market for a couple years now, is up about 20% year to date and up almost 100% trailing 12 months. So Bitcoin has had a good run right here. It is entering, or it has been in a solid period of consolidation here for the last few months. I do expect it to continue here. The Fed rate cut, as you mentioned, is priced into the market. So I expect Bitcoin's price to continue to consolidate here until we get the next leg up in liquidity, broadly speaking.
Nick, coming on the overall fact that we've seen an all-time high in this year in Bitcoin, the US legislation is clearly on the stronger side on one side, and other countries really seem to be picking up on that as well. What is your sense on what 2026 perhaps could bring in?
Well, I think that the progress on policy in the United States is a positive for Bitcoin and has been for the year of 2025. But we have to remember also that in 2024, we had the landmark ETF decision, and that was preceded by a court case in 2023, which paved the way for these ETFs coming to market. So the positive legislation has been supportive for Bitcoin here over the last couple years. There is the wild card of a strategic Bitcoin reserve sometime in the next 1 to 2 years coming out of the current administration. But even without the strategic Bitcoin reserve, I feel that Bitcoin has a tailwind from policy, both in the United States and from abroad.
Nick, also comment on the latest one that has come in from European Union, where some countries are now asking for even regulations across the European Union. France, Italy regulators, watchdogs are asking for that. How have you read into it? Because MiCA has been one of the fastest ones, the first ones rather, and now with a bit of a disagreement between that bloc. What is your sense?
In Europe, we have historically seen more of a negative attitude toward Bitcoin, especially given the backdrop of a digital euro. This is the European Central Bank Digital Currency Project, which the ECB has been working on for quite some time. So to expect stricter regulations in Europe, I would say, has been our baseline for quite some time, and it shouldn't interfere too much with global Bitcoin adoption.
Nick, the other thing is various countries are approaching Bitcoin and digital assets in their own ways. For India markets, there we are perhaps the highest ones when it comes to adoption. That means trading, taking positions, buying, selling when it comes to crypto. But when it comes to technology adoption, we perhaps lag behind quite a bit. How would you look at various countries, and what would you say on what really India needs to do to move evenly in that direction?
I would separate Bitcoin adoption into two avenues, really. Number one would be the investors. These are people that are looking to get into an asset class similar to the reason they get into gold, which is to own an asset that is not issued by banks or by private corporations, a neutral asset, if you will. The other cohort of Bitcoin adopters are people and in countries that don't have a stable currency regime, countries that are experiencing very punitive inflation, such as Turkey and Argentina. These are two countries with extremely high Bitcoin adoption rates. And it's not because the people in those countries are overly enthusiastic about Bitcoin as an investment, but rather Bitcoin as a hedge against complete disasters as far as currency regimes. India is somewhere in between these two cohorts because India has a lot of wealth. There are more billionaires in India than most countries around the world. At the same time, you have a currency in India that has modest inflation compared to the rest of the world, and definitely inflation that outpaces the developed world. So there are both types of people in India, and I do expect the adoption to continue more on the investor side as wealthy individuals, families, and corporations get involved in Bitcoin as an asset class, while the adoption of Bitcoin as a day-to-day, hand-to-hand currency, I believe, will probably be slower in India than other parts of the world.
Nick, I have one more question. On the kind of year that we've seen a very sharp decline in the dollar index and various other fiat currencies as well. But there has been a certain buoyancy when we look at Bitcoin, gold. How would you look at this? Would you put gold and Bitcoin in the same basket, really?
It's a great question. In theory, yes, Bitcoin and gold are similar asset classes in that they're both neutral. But the way that their price behaves, they really don't mirror each other. Bitcoin behaves more similarly to the S&P 500 than it does to gold. I believe gold is experiencing a fantastic year price-wise because a lot of disruptions in the global trading and monetary system. Bitcoin, on the other hand, benefiting from expansion in liquidity, credit creation in the United States, very large fiscal deficits year after year in the United States, creating a broad base of economic growth, and a lot of that money ends up in Bitcoin. So gold and Bitcoin behaving both in bull markets, but I believe for different reasons, and a weak dollar is supportive to both asset classes indeed.
Oh, absolutely. Nick Bhatia, I will let you go at that. Thank you so much for joining in. Appreciate for that very, very strong conversation. Hope to speak to you soon again. But with that, that's all the time that we have on this segment. News and more updates on the other side of this break.
CNBC TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Primary market activity has begun to gather pace again as the markets have been recovering from the lows. And another issue that has hit the markets today is Euro Pratik sales, and their 451 crore rupee issue has opened for subscription. The IPO is a 100% offer for sale, where the promoters and the promoter group entities are selling stake. The price band is 235 to 247 rupees a share, and just before the issue opening, the company has also raised 135 crore rupees from anchor investors, which include PineBridge, 361, Motilal Oswal, Nuvama, and a lot of other names. To discuss the issue and the road ahead for the company, we are now being joined by Pratik Gunwantraj Singhvi, who is the chairman and managing director at Euro Pratik Sales. Pratik, good morning. Thank you for joining in, and congratulations on your on heading towards Dalal Street. You know, I'll start off with business straight away. Your revenue growth for the last 3 years has been fairly subdued, right? And in the decorative wall panel segment, in fact, in the laminates business, it has even declined. Is this a company-specific issue, or is it an industry-wide issue? If you could shed more light on it, and do you see this trend reversing in this year as we go forward?
Firstly, thank you so much for having me here. So, as you have seen over the years, our company is bottom line driven. So we focus on the bottom line. We introduce a lot of new products, and year on year, the bottom line has gone from strength to strength. So, although there was a dip in just 1 year. Last year, we came back with more than 25% growth in terms of revenue. Also, in terms of the profit grew by around 22%. So we are into a space where we create new designs, new development for the Indian consumer, and that is what the business is. We are mainly bottom line driven company.
Okay, so you are a bottom line driven company, but we still trying to understand that what is the impact of whatever is happening in terms of rupee depreciation currently, because you do have a lot of your supplies and sales in the US, and some of it coming in from China and South Korea as well. Can you explain? You don't have hedges in place. How does that impact your bottom line in that case?
So we have done a very interesting thing in last few years. Currently, our dollar exposure is next to zero. So we buy generally in the local currency. If you're buying from Korea, it is from Korean won. If you're buying from China, it is RMB. So in that way, we have really protected our currency fluctuations, and it has worked really well for us since last 1 year. So currently, as on today, the company exposure to US dollar is negligible.
But so in that case, Pratik, you've made a couple of acquisitions as well in 2024, and some of them are from your own related parties. Why is that so? If you could explain that to us.
So in the last year, July 2024, we did the acquisition of our companies before going public. So all the acquisition was done from internal accruals. As on today, we are a net debt-free company, and as I said, all the acquisition, everything were our own companies, which we did in the year July 2024 before deciding to go public.
But why did you do that is the question. What was the reason for acquiring related parties?
So we did not want to have any conflict of business where we were partners. So that was the reason of having all the companies together.
So whatever growth is driven so far, the 3% growth that we've seen in one of the segments, is it because of consolidation that we've seen on your top line? There is no organic growth, so to say?
So it is a combination of all. Earlier also we used to supply to our subsidiaries. So now they are a part of the company. So it is all organic as well as the consolidation, both.
So I want to understand, what is the impact of consolidated entity on your profits? You said you're a bottom line driven company. So has bottom line expanded largely because of buying related companies? What is the organic growth in bottom line?
So yeah, it is a mixture of both. It has the company has also grown organically. Also, the acquisition has helped.
No, I want to understand the split. What was the split? Because if a lot of growth has come only because of acquisitions, what is the impact of organic growth?
So earlier, Pratik used to supply to the other parties. So there, the profit was already captured in the company. So now all that is eliminated. So then it is a direct sale to all the subsidiaries is on cost. So all the profit is coming to the company.
No, Pratik, the point being that you mentioned that you've grown organically as well as your acquisitions have helped you grow your bottom line. Has the larger share of the bottom line growth come from acquisitions of these related parties, or has the larger share of the bottom line growth come organically? If you can, is it a 60-40? Is it a 50-50? If you could tell us that.
So you can say around 60-40%.
So related parties is 60 and organic is 40.
No, organic is 60.
Organic is 60. Okay, fair enough. You also mentioned that if you are doing procurement, say from Korea, you're doing it from their local currency, from China, you're doing it from their local currency. How has that impacted your cash flows? Because your cash flows turned negative in FY25. Your working capital changes took place in that as well. If you could explain that to us, do you believe you will turn cash flow positive this year?
So we have always remained cash flow positive, barring last year. That was because of the recent acquisition. So all the acquisition were done from the internal accruals and the reserves and the accumulated profit over the years of the company. So we will be cash positive from this year onwards again.
Okay, but what led to that negative cash flows in FY25?
So the acquisition which we did, which we discussed earlier,
Okay.
that was the reason, yeah.
So your market share has been at 15.87%. How has it moved in last 3 to 5 years, Mr. Singhvi? What is the competitive intensity that you're seeing currently? What is the plan? How much do you plan to increase this market share by?
So I'll just give you a brief idea. 5 years back, market size would be around 200 crores. Today it stands around 1800 crores. We enjoy 16% of the market share in this decorative wall panel. The market is growing at 16 to 18% year on year. So it is 2.5 times of the GDP growth. So we hope to have a good share in the growth of wall panel segment. It's a new age sector. People are understanding the advantages of wall paneling, and slowly it's really picking up in India.
Pratik, one final question from my end. Which export geographies are you catering to, and how big is US part of your business mix? And is there any impact with regards to this 50% tariffs that the Trump administration has imposed on Indian exports? How has that impacted operations?
So currently our business is around 97% domestic and 3% exports. In the US, we formed a company 2 years back. It is a very nascent stage. There is no impact of tariff because we are exporting directly from Korea. So the tariff of India is not valid for us. Although the US market, we are at a very nascent stage. We hope to develop the US market in the coming years. And currently 97-98% of the revenue is India based.
All right. Okay. Thank you so much for joining in today and telling us about your company, the plans going forward, and the outlook as well on the industry overall. That's the word coming in from Pratik Sales. The IPO opens, and this is what the financials look like as well. Let's slip into a short break. When we return, we'll discuss market technicals with Sneha Sheth from Angel One and also discuss their top trading bets. Welcome back. You're still tuned into Trading Hour. Well, a couple of names that I wanted to put a spotlight on. Kotak Mahindra Bank, for instance, it has been contributing to the gains that we are seeing, and it has seen a further uptick from those levels at the day's high, 2.5% higher there. We also have Axis Bank, which is the other one which is contributing. And as we speak, we have seen Bharti Airtel as well moving to the day's high, and so has Cipla, TCS and Reliance done the same. So there are a couple of these heavyweights which are contributing to the Nifty gain. So when we started the show, the index was up 80 points. It's up around 103 points. So continuously adding to the gains that we are seeing from the lower levels. But let's do one thing. Let's talk about the trends from the F&O space. Sudarshan is joining us now with all the updates. Sudarshan.
So it's a good day of trade, and Nifty is holding on to levels about 25,150, and today's big part being played by financials, in which after a long time we have seen that Nifty Bank comfortably crossing the level of 55,000. Now it's trading near very important levels. But one drag is coming from the Nifty IT, though index is in the green, but again it's near the flat line. And for market to move higher further, Nifty IT also has to move up. So this brings me to put call ratio. It has increased, has moved higher to 1.40 versus 1.09. And the main reason of this huge writing is being seen in the put options. At the same time, premium is falling sharply. So two options on the put side, I've taken 25,100. Huge open interest buildup is being seen there. But premium has fallen to 16 from yesterday's close of 46. And similar pattern was being seen for 25,150 put option, where premium has fallen to 29 versus 76. But does it mean that market will move higher? Well, the question remains, because on the call side, if you go, you see that premium remains flat. So for now, the range has become from 25,100 to 25,200. That's the reason support. Yesterday's close, I would say today's intraday low, it's the same level, that is 25,070, and resistance is 25,250 after we have crossed the recent high of 25,153. For Nifty Bank, financials are today playing a huge role, especially Kotak Mahindra Bank and Axis Bank is seeing huge buying, and that's the reason support for Nifty Bank is around 54,800, that is today's intraday low, and resistance is 55,630. It's very important level because it's both 50 and 100-day moving average, and that's the reason I have taken Kotak Bank and Axis Bank in the stock list, because both these stocks are saying fresh buying. And apart from financials, name one stock that is seeing huge buying following the big order wins, that is NCC.
Interesting there. Good day indeed for the market so far. Sudarshan, thank you for that update. Sneha Seth from Angel One joins in for a quick chart check. Sneha, good morning. Thank you for joining in. The bigger part for today's session, of course, has been the Nifty Bank. Now that we are above that 55,000 mark, in fact, above 55,100 as well, do you see this move extending towards 56,000 and have a consequence on the Nifty as well? That part one, and your stock recommendations for the morning as well.
So, very good morning. Sudarshan has already given you the option activity. So overall, the setup is quite good. In Nifty, I believe at present 25,200 to 50 is an immediate resistance. And if you look at the options activity as well, we are seeing decent pile up in 25,200. So for today, it would be important that we may see an up move extending towards 25,200 to 50, but from above that, I believe for today it won't be possible. But overall, looking at the chart setup, especially banking index, wherein the PSUs were performing, and now the private sector banks have also chipped in, I believe the banking index looks poised for an up move at least towards 56,000, 56,200 is the level which we are watching for. And looking at the overall development, as far as individual counters are also concerned, I have a buy on Kotak Mahindra Bank itself, because if you see the overall setup, the counter was consolidating, has formed a very strong base around 1920, 1930 zone, and above, once it surpasses 2040 levels, I believe there will be a strong momentum which may come. So I would recommend buying this counter with a strict stop loss of around today's low, that is 1970, and the upside potential target will be around 2,120. Apart from this, L&T looks good. Here again, this counter was consolidating. And finally, this counter has managed to surpass the resistance zone placed around 3,620-25 zone. Looking at the overall chart structure, I think this counter is poised for an up move of at least towards 3,750. And the supports which may be acting as which can be a stop loss for now, that will be around 3,550.
Take that point, Sneha. Thank you so much for joining us today and taking us through those picks and individual levels to watch out for as well. Time for a short break. We'll get you more on the markets and specific stocks on the other side. Welcome back. You're still tuned into Trading Hour on CNBC TV18. A lot of stocks in the broader markets on our radar. Cement stocks, the pack is one of them. There's a bullish report by HSBC. Sudarshan is back with us. Such a busy day for you, Sudarshan. Tell us more.
So over the last few years, we have seen a major consolidation in the cement sector. And today, HSBC has come out with a note and saying that increased consolidation has led to an increase in market share for the top 4 companies. And now their market share has increased to around 57%. And also it says that leverage at smaller companies is positive for pricing for the sector. And as far the capex is concerned, or say capacity addition is concerned, HSBC believes that FY26 will be the peak, and preferred peak for it for HSBC is Ultratech, and here it has increased target price to 15,410 per share, upgraded Ambuja Cements to buy, and target is increased to 700, upgraded Shree Cement to hold, and target here is rupees 32,200, and maintains buy colon Dalmia Bharat with a target price of rupees 2,900.
I think Sudarshan has lost count of the last time he did not have a busy day. But thank you for joining us with that. Almost a significant price target raise is coming in from HSBC on a lot of these cement names, something as much as 45% on stocks like Dalmia Bharat and Ambuja Cements. Take a short break. But of course, before we do that, Vivek is here to tell us more about a lot of companies that announced their order wins yesterday, as many as 5 of them, from NCC to Midani and a lot of these. Vivek, tell us more on that.
Well, absolutely right. Busy day as far as infra companies and capital goods companies were concerned. Yesterday, a lot of order wins flowing through. NCC, large order win, almost 2,100 crore of order win from the Bihar government. Now, this is for the Barmer Reservoir project. Construction period of 30 months. Consolidated order book stands in excess of 70,000 crore, giving significant revenue visibility. Midani or Mishra Dhatu Nigam, a company, has secured an order of almost 136 crore. Open order book position of Midani now stands at over 1,980 crore. Translate Writing, that particular stock from the broader end, received new orders of almost 421 crore. One of these orders actually involves a large transmission line contract from a new country in the African continent. FY26 order inflows has now crossed 3,500 crore. And lastly, Sangvi Movers, a 292 order book or an order inflow. This particular order is for a wind balance of plant project. So this particular order will see revenue recognition within the next 3 quarters itself, given the fact that it commences in Q2 FY26, will be completed in Q1 FY27.
Okay, all right. Thank you so much, Vivek, for joining us with all those details. With that, we'll slip into a break. When we come back, our big story for the day, we'll discuss that in detail in the next segment. Welcome back. You're still tuned into Trading Hour. Markets doing well, continues to be above the 25,150 mark on the Nifty, but we have to talk about a big story. So much action happening in the primary market. We have updates coming in terms of new IPO approvals as well. Hormuz will tell us more. What's happening here? So much buzz.
When the going is good, the companies would want to go towards the primary markets, right? And that's what has happened in the last 3 months, when the market have seen some bit of recovery from the lows. And just yesterday, the regulators approved 5 more IPOs, and including the likes of Orkla, which is the parent company of MTR Foods, Hero Motors, of course, that does not have any relation with Hero Motor Corp. Pine Labs was the other IPO that was approved. The 2 units of Canara Bank, Canara HSBC, and Canara Robeco Robeco, which was approved last week itself. So 2 units of Canara Bank getting approval. There are a couple of others as well that received approval from the market regulator. So a lot of companies that are hitting the primary markets. But to tell you more on what has happened so far, the IPOs that have listed this year have not done much. When you take a look at the returns here, you've had close to 50 IPOs so far. This is as of the 11th of September, before Urban Company and all of the other issues opened. This is, of course, the listed ones. 8 of them are trading below their IPO price. Only 3 of them have doubled. 50 to 100% have been 9, but 17, which is almost a third of the IPOs that have listed, have only given single-digit returns so far. So, because, and of course, that's also courtesy of the market, the way the market has been. It's been sideways, and that's how it's reflected on a lot of these names as well. Now, when the markets were down earlier part of the year, if you take a look at January to June, the first 6 months of the year, we had only 24 IPOs. In fact, in the month of March, we did not have a single IPO. When the markets eventually made a first bottom, and then of course then we went to that 21,700 in April. But since June, we have had almost 29 IPOs. We've made that dash from around levels of around 22,000 odd towards 25,100 where we currently stand at. So 29 IPOs is including the 3 IPOs that recently closed for subscription and will be listing tomorrow, including the likes of Urban Company. Now take a look at the subscription interest here. Urban Company is a 2,000 crore rupee IPO, and it was subscribed over 100 times. Now, what reports are also saying is that this is the biggest or the highest subscription that any unicorn has received for an IPO, even higher than what Eternal or a lot of the other IPOs had received. So more than 100 times subscription there. Dev Accelerator, Shringar House of Mangalsutra also, of course, the IPO size is small, but still it had significant interest, particularly so because there were 3 IPOs that were open at the same time. And therefore, a subscription of 60x is still considered healthy. Now, on the pipeline, the road ahead as well, there are a lot of big companies that are lined up for their IPOs. Urban Company is listing tomorrow, as well as are the other 2. Prestige Hospitality is the big name that comes here. We spoke to Irfan Razak as well recently of Prestige Estates, and he also mentioned that with everything going to plan, the hospitality IPO should be in by next month, is what he mentioned. So that's the big one. Hero FinCorp is the other one. LG Electronics is the one to watch out for, because another Korean giant trying to put its stamp on the Indian markets. Hyundai is already been listed as the largest IPO of the country so far. So 10,000 crores there as well. Anand Rathi Shares, that is the other one, not the wealth. The wealth management business is already listed. So that's another one in the pipeline. Physics Wala is the other one that's in the pipeline. So there are a lot of issues that you need to keep an eye out for going forward as well. So the pipeline remains healthy. Of course, you're all watching out for the NSE IPO. Prashant also spoke to Ashish Chauhan, and he mentioned that maybe in the next 8 to 9 months, we'll have a NSE IPO as well. So that's the big one to watch out for. But the pipeline remains healthy. A lot of companies heading to the primary markets. We have an issue open as we speak, and there are some listing tomorrow as well. So the healthy.
Interesting times for the primary market. Let's see which way things go and what the moves on these particular stocks are after the list. Actually, because, you know, we've been talking about a lot of these stocks which see those pop-ups or that big surge during listing, but then they are not able to reach those levels. Clean Science and Technology, we spoke about it. You know, after that big fat finger trick that took place, the stock was still not at that IPO price, listed some 4 or 5 years back. So a lot of that action happening as well in this particular space. But you know what, you have something.
The first name that strikes when you mentioned the big pop on IPO is Idea Forge. Yeah. The Idea Forge was 672 rupees IPO price. The IPO post-IPO high was 1344, which is exactly 100% from its listing price. And look at Idea Forge where it is now, somewhere around close to 500 or 600 rupees. It fell to as low as 300. So, of course,
there have been a lot of fundamental reasons for that as well.
Of course.
The order book issues and the fact that there has been a lot of exposure to China, and that's something that the markets have not liked so much. But with that, we are completely out of time on this edition of Trading Hour. Stay tuned. A very special conversation with Jefferies Chris Wood coming up next.